So it's what everybody's kind of been predicting and waiting on is the stock market to crash. I think a lot of people are in denial, thinking that's probably not going to happen. And it really kind of looks like we're getting there with inflation. I think the Dow and everything is down another over 1% today. What's interesting is that crypto and Bitcoin are not down. They usually do follow the NASDAQ, so I assume that that's going to happen probably throughout the day. Bitcoin will start to drop. It's not a prediction. Don't follow me for financial advice on that. But it tends to be correlated with the NASDAQ as a tech item, not as a tech asset, I would say, not necessarily as a separating investment. We had a lot of big time companies yesterday come out and basically say that inflation is crushing them. You got a lot of these low margin companies that are going to have to either raise their prices, reduce their labor costs, or do something if they're going to combat this inflation problem that they have going. Well, I mean, we all have it going on, but that they're having going on at their business. And those businesses I'm talking about are Target and Walmart. Kohl's came out today, pre-market, talked about their earnings. I believe their earnings were 15 or 17 cents per share versus 87 cents, but they're only down 3.3%. That's surprising to me because, I mean, I don't even know. I know that the CEO said that they have some offers for sale. I believe that's what he was talking about. He was referring to, I believe, companies wanting to buy out Kohl's. Why, I have no idea. They would do that unless they're getting it at such a discount it makes sense to them financially from a business. Or I know like not Walmart, but Amazon. I know they use them for returns. So maybe it's some sort of deal with Amazon, turning them into little mini shops or warehouses. I know Amazon owns some of those food stores, so maybe they got plans for that. That's the only really reason I would see you buying Kohl's. Outside of that, nobody uses it anymore. Or unless you're going to take the whole product market online, that would make more sense. Kind of similar to what Macy's did. They saw, and I think Fredericks of Hollywood a while back also did the same thing. They saw the writing on the wall for the retail store, saw Amazon and what they've accomplished. And you just don't have that footprint. Now, there's always going to be a need for a store or some location you can go pick something up from, right? There's always going to be this immediate need, right? If you're sick and you need medicine, you need to go get some NyQuil or something, you need it there. You can't wait 2 days for Amazon to send it to you. So there's always going to be a need for these little stores, but maybe there's not as need of malls and all these things that are inside malls that you can kind of don't really need immediately, and you're kind of basically direct shipping it to yourself. Through various websites, and maybe in the future that's kind of how it goes. You have these websites with various products that they sell, and they kind of niche market it, whereas Amazon sells pretty much everything. Maybe these companies like, let's say, Fredericks of Hollywood for lingerie, Macy's for more designer clothes, and others start to get into these little these niches, and then you go to like 8 different websites to buy clothes. Sounds ineffective. I'm sure somewhere in the future, some company will make basically all those websites merged together where you can buy it like kind of like an eBay thing, so you can see everything at once, and then you can kind of go and maybe they have some sort of deal with the retailer to get you faster expedited shipping, things like that. I'm sure the future holds something crazy like that. But as of today, the market is crashing. Myself personally, I've pretty much liquidated most of my stuff a while ago. I've just been waiting for opportunity like this. Same with housing. I've done the same thing. I didn't liquidate my homes that I own. I've just been waiting. I've been waiting to buy a home at a cheap price. And maybe that happens, maybe it doesn't. It would probably require some deflation. It'd probably require massive supply coming in here. You got BlackRock, Blackstone, I believe is the other one, buying a bunch of homes. And if things happen for them, market starts to drop, Fed rates go up, they get a better interest rate than the rental interest rate they're getting, minus the risk that they are taking on owning a home and that value going down. Sorry, there's wasps flying around my head up here. I guess they're inside my ceiling fan on my patio. Once you have that, they could just toss out their homes on the market, get rid of some of that, give themselves some cash, because there's a better opportunity, and they really care about the earnings, what they're earning on the money that they're putting out. So lots to come, lots to do. I mean, there's definitely a lot of opportunities still in a crashing market to make money, and there's a lot of opportunities for buying. And me, when the market crashes, I see it as a clearance sale. I try to go in and grab as much as I can. Back in 2011, when the housing market crashed, I bought a couple houses in 2011. Tried to buy some more in 2015 and 16. And same with stocks. Back when we had the crash in 2020, and the pandemic and stuff. I bought stuff then, and well, that was not in my houses. I bought crypto and I bought stocks at that point. And obviously those have turned out to be great. But my daughter's now screaming, so I assume that means my kid did something to her. So I've got to get offline. Appreciate it, guys. Good luck in the market today if you're out there, and have a good day.